Ladies and gentlemen, during this video, I'm going to show you what to do and how to do if you have shares and you sold the call and call is going to expire tonight and your shares are going to be taken because the current price is higher than your strike price. What you can do, like first of all, you can just let it expire and your shares to be taken from you. But if for some reason you don't want your shares to be taken from you, for example, for tax purpose or etc., you can roll that call to the next month. And I'm going to show you how to do that. Now, if we look currently, we can see that we have BlackBerry, 400 shares, and the average cost which we bought is $9.43, and the current price is $10.43. Now, we sold a call with $10 strike price for May 15, and today is exactly May 15th, and today it is going to expire. And as you understand that because the share price is $10.43 and our strike price is 10, these shares are going to be taken from us if we don't do something about that. Now, what can we do? The strategy which we're going to implement called short roll call. Now, where you can find it, you have to go to options and then you have to click advanced strategies. Now, before I do that, I'm going to calculate how much we're going to get. In order to do that, we're just going to option chain. You put the symbol BBRY, and we have to look at two strike prices. First strike price, and the expiration date for today. So we can see 15th of May, and we look at $10 strike price. Now, what I can see here that the bid and ask is 37 cents and ask is 40 cents. Now, remember, because we are buying that call back, we're going to pay the highest price. So we're going to pay 40 cents. Of course, we might bargain and we get maybe less because there are 3 cents here difference, but the current price right now is 40 cents. So we have to think that we're going to pay 40 cents. The next date we're going to look when we're going to move it forward. Sometimes it's only a couple of weeks, sometimes it's a month, sometimes it's 2 months, sometimes you can roll it over for 3 months. It depends what kind of credit you are happy to get. Now, if we're looking at the 19th of June, so it's next expiration Friday, and we look at the same strike price. Now, if you would like, of course, you can move it higher. So if you look right here, I can move that to $11 strike price and I can get 39 cents for that. So if you remember, I would pay 40 cents for $10 strike price and straight away I can sell $11 strike price for 39 cents. So it would be 1 cent debit. So I'm going to pay for that transaction difference 1 cent plus brokerage commission for 2 trades, right? But as you can see, I moved the strike price from 10 to 11 and the share has to move above 11 in order to be taken from you. Now, but I don't want to do that. I'm going to do it with a $10 strike price, okay? And I can see here that with a $10 strike, I can get, you can see bid and ask here, 81 and 83 cents. Now, remember, because we're selling here, we're going to get the lowest price, 81 cents. So if you remember that in previous date, we saw that we have to pay 40 cents, and here we're getting 81 cents. So if we deduct 81 cents and if we deduct 40 cents from 81 cents, we get 41 cent credit. So that's what we're going to get from this transaction. Now, 41 cents on the $10 represents 4%, which is pretty good. It's satisfactory for me, so that's why I'm going to do this trade. Again, we can see that here it's 2 cents difference between bid and ask, so I might negotiate because there were 3 cents there and 2 cents here. So I might try to get not 41 cents but 42, and we'll see if I can get it. Now, the way you do it, you click on the trading center, Options. You click Advanced Strategies. And here you can see Rollout. And this strategy called Short Roll Call. First of all, we put an underlying security, which is BlackBerry. We put the amount. We have 4 contracts because we have, and I leave it good to today, because if it's not executed today, I cannot do it tomorrow, right? Because it's already expired. Now, if you were putting it on Monday and you have 5 days, you can put good to cancel. And during those 5 days, if you have 5 days, it might trigger at certain time. Now, then you can see that practically everything is filled straight away for you. The only 2 things which you have to put the strike, which is 10 in our case, in both situations. And then in the second leg, we need to change the date. And I'm putting 19th of June, right? After that, I'm going to put net price, not market. If I leave it here as a market, it will trigger and I get it whatever I can get at the market. Or I can set the credit, and in our case, I'm going to try 42 cents. After that, I click Submit, and I check it one more time. So what do I do? Buy to close, current position, strike 10, May 15th, right? Call, and here we can see it one more time. 15th is the year, 05 is our month, and 15th is the date. Then C, it's a call, and 10, it's a strike price. Then the second leg we sell to open, same amount of contracts, same strike price. The only difference is the expiration date. Okay, and I click Submit. After that, we can see that this order is in review position right now. So sometimes it takes few seconds. You can refresh several times, and you will see when it's rather open position, if it's not executed, or it's already executed in this case. So that's how you do your trade with a short roll call strategy. So as you can see, after reviewing, they opened that position, but it wasn't filled. As it is last day, I cannot leave it for another day to wait. So what am I going to do? I'm going to cancel that one, and I'm going to set the smaller strike price. How you cancel the order? You put the tick here, and then cancel selected. Check it that you're canceling exactly the order you want, and then you submit. Okay, and then we can see that the same order was cancelled. After that, I'm going to do exactly the same. So I'm going to Options, Advanced Strategy, Rollout, Short Roll Call, BBOY, Quantity 4, Good Till Through Day, Credit, I set 40 cents this time, Buy to Close, Strike 10, 10, and 19th of June. So check it one more time, click Submit, check it Buy to Close, $10 strike price, May good to cancel, and sell to open for contract June 19th, and I click Submit. Okay, again we see that it's under review. Click Refresh. The position is opened. You can click Refresh several times, and if it doesn't work for you, you have to adjust it again. Now you can do it easier way, so you click on this place and you can just change the net price without changing the whole order. So as you can see, I put in 38 cents and click submit. And submit one more time after checking it. Then you can see it under review. Click refresh. One more time. Again. Sometimes it takes some time. And as you can see, our order was executed at 38 cents. So I had to change it several times. But as you can see, it was done. So I get 3.8%, which is not bad as well. Minus commission, of course, so it would be a bit less. But at the same time, I roll my position over. And as you understand, I got 38 cents for each particular share. Okay, I wish you good luck and profitable trades on your account. All the best.